Oh, good morning, everybody. A bit of a rough start for me. Not feeling particularly well, so yeah, get those kids out the house and let's get some charts on the go, shall we? So we've got that big day today, haven't we? The crypto summit and all this sort of stuff. I mean, as far as the price is concerned, it doesn't really particularly feel that bothered by it, really. It's not made a new low, it's not made a new wick low, it's not made a new candle body low since we came down here. So, in all fairness, relatively hopeful for the way that it looks. We talked about and we still reflect upon the the symmetrical triangles that are either born from the 200 simple and the 50 exponential, where you saw the supports and the resistance, or the triangle within the triangle, which is the Bollinger Band center and the 200 exponential, which again is still another triangle. So we got a 50-50 formation with another 50-50 formation. It's a situation which is basically all about those moving averages. So don't think about it as in like, the triangle. It's support resistance is basically what we're looking at. And even today, it's a bit of a mad day already. So we've come down to 84,700. We've also been up as far as 91,300. And the day is young, really, as far as I'm concerned. I've not long been up. So this gives a bit of a bearish overtone because it's 65% of the time more likely to remain below the center of a Bollinger Band, so below the 20 weekly or the 20 daily or the 20 whatever. Same thing with the 21 exponential, serves the same purpose. But also, V-shaped recoveries are very likely to take place from a 200 simple or an exponential, so you got that in it too. Which is why I suppose it would appear that there's a strong case that the low is already in or has certainly been seen by this wick, but candle bodies continue to close mostly above the 200 simple, but also the exponential as well. And this is where things can turn around. But from a trading perspective, you've got the good chance of a reversal from here. You've also got the higher chance of a rejection from here, which is basically what's going on, isn't it? Statistics reflect likelihoods, don't they? And that's why we use these things. So we know that when you lose a Bollinger Band, you're likely to stay below it. You know that when you've reclaimed it, you're likely to stay above it. At the moment, we're below it, so you're more likely to stay below it. But we still have these areas down here. So what does all this mean? I hear you say, I want to make money today. I don't want to wait. I don't want to wait for anything. Waiting? No, that's not for me. Well, it might have to be honest with you. Anyone can take a position at any time. And really, on something like Bitcoin, which effectively is an up-only chart, you're most likely to be forgiven, given time. But that's for those who haven't got the patience, really. I'm still relatively bullish throughout the market overall. However, the things are getting a little crazy. And I don't really want to stay in losing positions if they continue to lose. And my criteria for Ethereum is if we start closing below 2,100, I'll get out with the view to get back in at the upper teens, really. Just to save a bit more damage, mitigate losses, buy back lower. But we haven't actually hit and closed below that area yet, so criteria has not yet been met for me to do that. Most of my positions are actually in profit, surprisingly, but there are some which are not. So it's not all good over here. So just remember, you're not on your own. You're not the only one that makes a mistake. We all make them. It's normal. Spot positions are particularly difficult to stay in, but they're also quite hard to sell if you're in a loss. So it's tricky. And I mean, when I say in a loss, I mean I bought Ethereum and Ethereum started coming down. My first buyback was 3,000. So obviously that was a mistake. 2,800 also. No, that was a mistake. 2,400. No, also that was a mistake. So those ones are all underwater, but I just want to reflect on the fact that, actually I still have some Ethereum from all the way back down at $160. So it swings in roundabouts. But like I say, I was wrong here, and I was also wrong here. So don't worry if you're in a losing position. Now, from what I understand, and I need to look into it a little bit more, and since I'll be slothing around in the house today, that's probably what I'll be doing. But The crypto summit, I think, Greenwich Mean Time takes place between like 6 and 10 o'clock tonight. It's quite late, really. Unless somebody says something with significant implications to it. And again, it's just words. Words not normally that bullish. They'll be bullish at the time. It wouldn't surprise me to see like Ethereum could shoot all the way up into the death cross up here. 2,900, 3,000. That would be good. Only to see a rejection from there. Bitcoin, again, Bitcoin, it can break this triangle and then get sucked back within it. It's only when we see closing candles above these areas of rejection. So closing candles at this point now above 94,000, that'll be good on a daily. Anything higher than that, even better. Again, it starts to get worried if you close below, and again, we're talking candle bodies, not where it's closing below the 200 simple moving average, which at the moment is 83,000. So the criteria for either directions is yet to be met. Symmetrical triangles are 50-50, but because we're below a Bollinger Band center, I'd say it's ever so slightly in favor of further downside, so probably 55, 45, that kind of odds, which aren't great odds in either direction, which is why trading within triangles is usually a bit of a crap thing to do. Because the resistances and the supports get shorter each time, so every time you make a trade, if you're just trying to trade within the triangle, the trades get smaller and smaller and smaller until you reach an apex and a decision in one way or the other is made. And then at that point, it's a gamble, it's a 50-50. So it's up to you how you want to go play it. I'm going to keep my eyes on the prize when it comes to that summit. If I have time to watch any of it, I will. But I wouldn't hold out too much for it. There's a lot of weight that a lot of people I've seen have been putting on it. And long term, I imagine it would be good. But in the short term, just like when you see anything, like a burn, the BNB burns. We're going to do a BNB burn in a couple of weeks. Everybody starts buying, the price goes up. This is really good. This is great. The day that the burn happens, bang, down. What's going on there? I don't understand. Well, you told us you're going to do a burn, so we priced that in. The day that the burn happened, it had already reached its top price, and now it's come back down again. Shortly after that, it starts to trend back up and go up because there is a fundamental change to the supply there. And it makes a difference. But the moment that it took place, every time it would dump. And just using that as one example, there's a million different types of examples. Mainnets are always a good one. I don't really hear so much about that this time round, but in the last cycle, that was always a big thing. Mainnet coming, mainnet. Did you know that mainnet coming mainnet is due to arrive on, the smelly snail coin? Mainnet, smelly snail coin, bullish. Why is it bullish? It just is, all right. Trust me, bro. It just is. And then mainnet comes, dump, crash, dead, over. So I imagine we're going to see a similar kind of thing today, aren't we? Really? You've seen it. I think you get it across the board, across everything. You even get it on when the Fed lower rates. We think they're going to lower rates. The market thinks they're going to lower rates. We're going to lower rates, I think. Everyone thinks they're going to lower rates. Things go up, start moving up. The day comes, we're lowering rates. Dump. What? How? Well, I mean, you said without saying that you were going to do it, so we priced that in, and it's gone up. And now that you've done it, actually, we've already reached that price, so it's gone down. Markets tell the future in a way, don't they? In many ways, they are like, a horoscope, That's basically what it is. So to see the price meandering around in this 50-50 formation, hours before this special event, I wouldn't hold out too much. But look, I'm not shaking out. I've got plenty of hodl, plenty of it. I'm knee deep in it, actually. So, I'll enjoy what happens when it goes up, and I won't enjoy it when it goes down. But until it reaches certain areas, certain lower areas than where we are right now, I'm not going to get shaken out of stuff. I've been relatively careful about how I operate my buybacks and my sells anyway, as you all know. In around here, out around here, in and out around here. Generally out throughout all of this, starting getting in around the end of the summer, as we've talked about, in, up, out, and then started to go back in again around these areas bit by bit, which currently is not it's not worked out particularly well. You can't get them all, but you get enough to pay the bills, right? So that is basically all I have really got to say for this morning. The charts are the same as they were yesterday and the day before and the day before that. Symmetrical triangle formation. Sit back, watch and wait. Do we get supported above here and continuation up? Do we get rejected from here and break down? We don't know until we see it. It's probably best just to watch and enjoy. If you are, like I say, hodling, that's fine. Just enjoy the ride, you know. The cycle, as far as I'm concerned, is not broken. It's unbroken. But and with that, we should expect higher highs generally anyway. But immediately, not entirely sure. I'd rather this summit didn't happen in the first place, but it is. So we'll just have to go with it. And I always sort of use that analogy of chucking a brick in a pond. So you got a placid pond, at one with nature, doing its thing, finding balance and equilibrium. And then someone chucks a brick in it, and it takes a little bit of time for the chart to get back to normal. So whatever is going to happen today is going to be a brick coming in, and it's going to make ripples across the pond, and then you got to wait for those ripples to settle for us to actually use the chart effectively again. That's how I interpret it, really. Any manipulation of any form, whether it's bullish or bearish, kind of breaks the chart for a short period of time. So expect a broken chart, I reckon, after today, and depending on how significant the pump and dump is, and we're just assuming a pump and dump, it may not, but just it depends on how vicious it is, depends on what the chart looks like afterwards, and then you have to sort of wait till the dust settles to try and pick up on where you were. Right, I'll leave it there. Thank you for watching. Hope you have a nice day. Take it easy.